In this presentation, we will record the receipt of inventory that was requested with a purchase order, entering that inventory into the system as well as the accounts payable in the system with the use of a bill within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. Let's get an idea of what we are doing with the entering of the bill and the related inventory. If we select the plus item up top, we have the vendors up top, and you'll recall that in prior presentation, we set up purchase orders requesting inventory, purchase orders that don't actually have a transaction but are just a request, meaning no effect on the financial statements, but a request for inventory, that inventory in our case being, of course, the guitars. Now we're going to receive that inventory. When we receive it, we now have possession of the inventory, and we now have the bill that's given to us from the vendor for that inventory. Remember, we haven't paid for it yet. So now we want to enter that into the system. We have possession of it. Now we need to enter that possession of it, increasing the amount of inventory in our system, recording it, actual transaction on the books for that inventory, and recording the fact that we owe money for it now that we do have possession of the inventory, and therefore the accounts payable will go up. We will do that with a bill. Just to get a better idea of this, we're going to also check out the expenses on the left side, going down to the vendors. And if we look at the expenses tab up top, let's go to the expenses tab instead. We had the last two purchase orders that we have entered. So we had one for Fender. This was a new vendor we set up, and we had one for Epiphone. Those are going to be the two purchase orders that we have. We're going to start off with Fender. So if we select that purchase order, you'll recall that we made this purchase order, no transaction. That's what we requested, and that's what we expect to be billed for on the receipt of the guitar. So here's the amount. That's what we expect to be billed for. We now have received this Squier guitar in our store. We have now the bill that's attached in the box, we can imagine, with the guitar. Now we're going to enter that bill into the system. As we do so, we will record the inventory in the system, increase in the asset of inventory, and the accounts payable, the fact that we owe this bill. Let's do that now. We're going to close this back out. We're going to select that plus item up top. Once again, we're in the vendors section, and we're going to enter that bill. So we'll enter the bill. The bill looks a lot like a check, but remember what the bill means. It means that accounts payable is going up. Every form typically has some type of transaction, except that purchase order, some type of effect on the financial statements. The bill means accounts payable, what we owe, will go up. And that bill is going to go to a vendor. Our new vendor is Fender. We can find it with the drop down, or we can start typing in Fender, the vendor, and tab. So once we do that, we see on the right, we get this pop-up saying, hey, we have this purchase order that's related to that bill. Do you want to take a look at it? We could open it, but then we'd have to close what we have here, so we won't do that. But here's the amount. We're going to add this. This is indeed what we want to enter into our system for the bill. So we're going to say add, and it'll take that information from the purchase order, connect it to the bill, which is nice. We can see that link by seeing this one linked transaction. There's the purchase order, which we could then once again go to, but we're not going to at this time. And so that will help us to populate the information. As we go through this, we're going to say that the date is going to be the 14th. I'm going to select the plus on our keyboard to get up to the 14th. And then I'm going to set the terms to be net 30, meaning we're going to owe this in 30 days. So that means the due date will be calculated for us by QuickBooks at 3/16, 30 days later. Then I'm going to scroll down. It's not going to have a category because that would be a non-inventory item. If we're just paying something like the phone bill or something like that, adding an account, we're going to scroll down to the items which have been populated for us. They were populated for us by connecting the purchase order. So connecting the purchase order gave us this SQ, the Squier. That's what we're purchasing from the vendor Fender. That's what was on the purchase order. One of them, the rate is $168, pulled from the purchase order. We are going to say it's billable, and this is how we're going to tie it out to the sales receipt or invoice that we will create for this particular customer. And this is going to be something that's not a perfect tie out, but it'll give us that connection so that when we create the actual bill for this customer, because when we purchase this purchase order, it was for a custom order from this customer, new music stuff. So now we're going to make an invoice and it'll tie that out, giving us at least a transaction or a tracking of this guitar all the way through from the purchase order to the bill to the invoice or sales receipt. We'll see that process as we go, as we make those forms in a future presentation. We do have the customer. This is not a required field from the purchase order. Remember, we may not always have a customer. As we see later, we might have made a purchase order just to have guitars in the store. This one was tied particularly to this customer, however, and we want to be able to link that through the sales process to make sure that we call this customer, remind us that we need to get in contact with them, and then make the final sale, which is going to be done with an invoice type form or a sales receipt. So here's going to be the final amount. Remember that the transaction with this should be a bill increasing accounts payable. The other side should be increasing the inventory account on the balance sheet. Let's save and close and see if that is indeed the case. Save and close. We're going to go then to the reports on the left side. Go to our favorite report, once again, that balance sheet report. We're going to change the dates up top from 01/01/19 to 12/31/19. That's January through December 2019, and run that report. And then if we scroll down to inventory, here's our inventory. Notice once again we have these two inventory accounts. So we set up the Epiphone guitar and it went into the inventory asset as opposed to all the other inventory that went into this inventory account. Let's take a look at it. If we go into this 168, we see the bill and there's the Squire that we just set up. Now we wouldn't really want two inventory accounts. I'm going to scroll back up and go back. We'd like this to all be going into inventory unless we're breaking it out for some reason. Why did this happen? Because when we set up the new inventory item as we entered the information into the purchase order, we set it up going to the second inventory account. We kind of have a duplicate account because when we created the chart of accounts, QuickBooks gave us two accounts for some reason that are inventory. We'd like to just use one. How could we fix that? Let's do that as we go. We can then go to the sales item on the left. We can go to the product and services. And the item that we have purchased, the inventory item we purchased, the new item from Epiphone, is going to be that Squire guitar. So this SQ Squire. If we edit the detail for the SQ Squire, we'll see that the inventory account is going to inventory asset. If we select that drop down, there's two of them. We're going to now change it to inventory and then save and close. Now let's go back to the financial statement and see if that made the adjustment. Let's go back to the reports and see if it adjusted that inventory item that we used in the purchase order and the bill. We'll then go to the balance sheet. We're going to change the dates up top once again from 01/01/19 to 12/31/19. That's January through December 2019. Run that report. Scrolling back down, there's the inventory item. So now we only have one of them, which is a good sign. If we select that, there it is. There's the Squire going to the proper place. Going back up top, back to the report summary. The other side isn't going to the income statement. We haven't made a sale yet. Where it's going to go is the accounts payable. We owe the money. So there's the 168. If we select that item, we see that 168, the other side of this bill. If we select that bill, then of course it'll take us back to that bill. Going to close this back out. Now we'll do the same thing for the other purchase order. So to recall what we're doing, we're going to go to the expenses. We're going to go to the expenses tab. And then now we're looking at the other purchase order for Epiphone. So here's the Epiphone purchase order. We requested inventory from Epiphone, 3 guitars. We are now imagining we're in the warehouse. We got those 3 guitars and we got the bill attached to it in the box with those guitars. So we're going to select the plus item up top. We issued the purchase order. Now we got the guitars. We're going to enter the bill recording the guitars that we have now received on the books as an asset and the related accounts payable. The bill itself means accounts payable is going up. That's what a bill means. We're looking for Epiphone, our major vendor this time. We could select the drop down and find Epiphone or type in Epiphone. And that's going to be it. Now we have this bill that pops up. We're going to say, yes, please add that information. This is the purchase order. So this is information that's tying to the bill from the purchase order. Here's the purchase order. If we want to see it, we can open it. We're not going to do that now. We're going to just add the information. And then if we scroll down, the information is populated in the item details. So we'll see that in a second. We're going to scroll through this. We're going to say that the mailing address is here. Terms net 30 as it has been in the past. The date is going to be February 14th. That's what we want. The due date then is 30 days later in accordance with the terms. We're not going to have the category detail in the bill because we're working with inventory. It's been populated for us in the items detail, inventory items, pulling this information from the purchase order as was given by that little box on the side, tying this to the purchase order. We have an Epiphone. It's a Les Paul. We got 3 of them. We imagine that we're seeing those in our store. We got the 3 guitars, and they cost then $1,200. We're now going to enter that as a payable. We're not paying it yet. It's a bill, increase in the accounts payable. We don't need to add billable or taxable because there's no customer. We're not going to add any customer here. So here is the transaction. This will once again increase accounts payable as a bill should do, and the other side will go to inventory. Let's do that, save and close, and check that out. So save and close, and then we're going to go up to our reports, or over to our reports. We'll run that balance sheet one more time, the balance sheet report. And then we'll scroll up top. We're going to change the dates from 01/01/19 to 12/31/19, January through December 2019, and run that report. And then if we scroll down through the report, we're going to see inventory. Selecting inventory, scrolling down, we're going to see that Epiphone Les Paul. There's the bill. There's the increase to the inventory from the bill. Scrolling back up, going back to the reports, the other side then is going to be in the liabilities, accounts payable. We have not yet paid it. Selecting the accounts payable, we'll then see the bill to Epiphone for the accounts payable. Let's take a look at some other accounts just to see the supporting documentation for the accounts payable. If we go back to our report summary, I'm going to open up a new tab, right-clicking up here. We're going to go to duplicate. I'm going to pull this tab to the right, so we have the balance sheet over here, new tab, where we can have new reports. We'll go to the reports tab on the bottom left, and then let's scroll down to the supporting information for the accounts payable. That will be under the section of what you owe, and as we select that, we can go down to the vendor balance detail report. Vendor balance detail, selecting the vendor balance detail. This is a subsidiary account for accounts payable. You see Epiphone and vendor, those are the 2 bills we have now entered. We owe them these amounts, and it totals up then to the total of $1,368. If we go back to the balance sheet and go back down to the accounts payable, $1,368. So this is the total of who we owe. If we click on it, we get a GL or transaction report, but it's ordered by date. We want to see it ordered also by who we owe, by vendor. That's done with a vendor balance detail report. If we go back to the balance sheet, scroll up, we have a similar issue, similar thing with the inventory. Here's the inventory that we have in dollars. If we select it, we get the transaction detail for that inventory. But what we really want to see is the type of inventory we have. To do that, we can have another report, go into our reports, and the second tab, once again, reports. I typically just type this one in there. I want an inventory valuation summary. Let's look at the inventory valuation summary report. We'll change the date up top. I'm just going to make it the end of the year, 12/31/19, December 31st, and run that report. So December 31st, if we scroll down, then the total should be equal to what's on the balance sheet, $3,312. Back to the balance sheet. If we scroll to the right, the total $3,312 on the balance sheet. Here's the detail of the activity for the year, but it's in order by just date of transaction. What we want to see also, if we go back to the second report, is what types of inventory we own. We've got these types of inventory, in our case guitars, the quantity on hand, the amount, and this is how we can break out the actual quantity, what we have on hand in terms of tracking the inventory. We dealt with the Squire this time, so if we select this SQ Squire, we could see this transaction, we can see this bill that we have just entered increasing the inventory even though we have not yet paid for it. If we go back to our report, then the other side was an ELP or standard guitar. If we select that item, then we can see this bill for the $1,200 for the ELP for those 3 guitars that we purchased from that vendor from Epiphone. For more accounting information and accounting courses, visit our website at accountinginstruction.info.